Once upon a time, in a not-so-distant era, when the name Boeing was synonymous with absolute dominance in the skies. In the golden years of commercial aviation, between the 1950s and 1980s, the American giant didn't just have a slice of the market, it was the market. The 707, launched in 1958, revolutionized aviation by making intercontinental travel accessible to the masses. The iconic 747 jumbo jet, which first flew in 1969, completely changed the concept of long-distance air transport and became the uncontested symbol of American technological progress. The 737, started in 1967, established the standards for domestic and regional flights. Every Boeing launch indicated what the future of global aviation would look like. In those golden days, the philosophy that drove Boeing was crystal clear. Engineering first, profits later. Engineers were the kings of the company, and technical boldness was not just encouraged, but required. If it's not breaking barriers, it's not Boeing, could have been the company's unofficial motto. The company invested heavily in research and development, even if returns would only come decades later. The few attempts at competition seemed like bad jokes. Douglas, with its DC-8 and DC-9, managed some market share, but never represented a real threat to the Boeing empire. Europe? It didn't even appear on the radar as a possible competitor in the commercial aviation segment. But in the corridors of power in various European capitals, something was being built.
If you're also passionate about the world of aviation, consider subscribing to the channel and supporting our team.
In 1970, Airbus was born, an unprecedented alliance between France, Germany, the United Kingdom, and Spain. What seemed to be just another governmental attempt to create a national champion would soon reveal itself to be something much more dangerous to American dominance. Boeing executives looked at this European initiative with the same disdain that a giant looks at an ant. Europeans making airplanes? What a joke! After all, Boeing had just launched the 747, and its strategy was clear. The future belonged to big jets that could transport hundreds of people on intercontinental flights. While Boeing bet on larger aircraft with 4 engines, Airbus looked at a specific niche that everyone ignored. In 1972, they launched the A300, the world's first widebody with only 2 engines. The idea seemed absurd. How could a 2-engine aircraft be safe for long distances? The answer came with technology and regulation. The A300 wasn't just more fuel efficient, it was proof that you could do things differently and better. But the world was changing in ways that Boeing couldn't see, or perhaps simply didn't want to. In 1978, airline deregulation in the United States completely changed the rules of the game. Suddenly, low-cost airlines began to proliferate, and demand shifted towards something Boeing had underestimated: efficiency. It was no longer enough to transport many people. You had to do it while burning less fuel, with less maintenance and greater reliability. Exactly what Airbus was proposing. It was in this gap that Airbus delivered its first decisive blow. In 1984, the European company launched the A320, an airplane that seemed to come from the future. While Boeing continued betting on updates to its classic models, the A320 brought revolutionary technologies: fly-by-wire instead of mechanical controls, inside stick instead of the traditional yoke. For pilots accustomed to decades of tradition, it was like trading an old car for one with power steering. The A320's first flight happened in 1988, and despite an accident during a demonstration that could have buried the program, something surprising happened. Airlines began lining up to buy it. The reason was simple. The A320 consumed significantly less fuel than its competitors, and in an industry where margins are measured in cents, that made all the difference. Meanwhile, Boeing maintained its conservative strategy: 737 updates, and confidence in its historical advantage. Why reinvent the wheel when you already dominate the road, thought the executives in Seattle. But the numbers didn't lie. By 1990, Airbus had already conquered about 15% of the global commercial aviation market. It was still far from Boeing's 55%, but for a company that had started from zero just 20 years earlier, it was an impressive achievement. If there's a moment that can be marked as the beginning of the end of Boeing's golden era, that year was 1997. That year, the company merged with McDonnell Douglas in an operation that seemed to make perfect strategic sense. It would unite Boeing's leadership in commercial aviation with McDonnell Douglas's expertise in military aviation and defense. What no one predicted was that this merger wouldn't just bring together airplanes, it would bring together completely opposite corporate cultures. McDonnell Douglas had spent decades focused on government contracts, where the predominant culture was rigorous cost control and margin maximization. Its executives had completely different mentality from the Boeing tradition: profits and shareholders first, engineering second. Gradually, this new philosophy began to contaminate Boeing's corridors. Meetings that were once dominated by technical discussions began guided by financial spreadsheets. Research and development investments began to be questioned more rigorously. The question shifted from, "Is this technically viable?" to, "Will this give returns next quarter?" The company's strategy reflected this change. Instead of betting on completely new and risky projects, Boeing began prioritizing updates and incremental improvements to its existing models. It was cheaper, safer for shareholders, and apparently more sensible. But the market didn't wait for Boeing to make up its mind. By the late 1990s, the A320's success could no longer be ignored. Airlines around the world discovered that the European model's operational efficiency largely compensated for any historical loyalty to Boeing. Meanwhile, in the widebody aircraft market, Boeing still maintained its supremacy with the 747 and the brand new 777. But Airbus didn't stand still. They launched the A330 and A340, models that began competing directly in this segment traditionally dominated by the Americans. By the end of the 1990s, the numbers were alarming for any Boeing executive. Airbus had already conquered about 30% of global commercial aircraft orders. In just 2 decades, the European amateurs had become a real threat to the American empire. In 2001, the unthinkable happened. For the first time in decades, Airbus surpassed Boeing in annual orders. It wasn't by a little, it was a clear and unequivocal turnaround. If that could be explained as an anomaly, an atypical year, perhaps Boeing's leaders could sleep peacefully. But in 2003, something even more devastating happened. Airbus also led in deliveries. That meant that not only were airlines preferring to order European aircraft, but Airbus had developed production capacity to meet this growing demand. In 2005, the European company made their move that many considered completely unthinkable and outside of Airbus's philosophy: the launch of the A380, the largest passenger aircraft ever built. With 2 complete decks and capacity for more than 800 passengers, the A380 was a project that would cost tens of billions of euros and represented a gigantic bet on the future of super jumbos.
Boeing watched the A380 launch with mixed feelings. On one hand, it was a validation of its traditional strategy of large aircraft. On the other, it was evident that the Europeans were willing to make investments that Boeing, increasingly conservative, would hesitate to make. The American response came in 2006 with the launch of the 787 Dreamliner. While Airbus bet on bigger, Boeing bet on more efficient. The 787 promised to be 20% more economical than any competitor, using advanced composite materials and cutting-edge engine technologies. On paper, it seemed like the perfect strategy. In practice, it would be the beginning of a nightmare that would haunt Boeing for more than a decade. The 787 program faced monumental delays, unprecedented technical problems, and costs that exploded far beyond initial predictions. Meanwhile, the A380, despite being technically impressive, didn't achieve the expected commercial success. But by the end of the 2000s, one thing had become crystal clear. The era of Boeing's absolute dominance had ended. Airbus and Boeing were practically tied in deliveries, about 50-50 for each. But the European company demonstrated greater commercial consistency and, mainly, greater capacity for innovation. If the 2000s showed that Airbus could compete on equal terms, the following decade would prove that it could surpass Boeing at its own game. In 2010, Airbus did something that would forever change the aviation market. It launched the A320neo, or New Engine Option. The idea was apparently simple. Take the already successful A320 and equip it with new generation engines, more economical and quieter. Airbus's own initial prediction was modest, about 600 sales. What happened was an avalanche. In just a few years, the A320neo family accumulated more than 19,000 orders, becoming the best-selling commercial aircraft in aviation history. Boeing was caught completely by surprise. Its response was desperate and would reveal how far the company had strayed from its innovation roots. The 737 MAX wasn't a new project. It was an emergency update of the old 737, originally developed in the 1960s. To compete with the A320neo, Boeing tried to transform a 6-decade-old project into something modern. The biggest problem was technical. The larger, more efficient engines simply didn't fit adequately on the 737's low fuselage. Boeing's solution was to create an automated system called MCAS, or Maneuvering Characteristics Augmentation System, that would electronically correct the problematic flight tendencies caused by the forced installation of the new engines. It was an elegant solution on paper, but catastrophic in practice. Between October 2018 and March 2019, two 737 MAX crashed under similar circumstances, killing 346 people. Investigations revealed that the MCAS system was causing dangerous flight behaviors and that pilots had not been adequately trained to handle these situations. The result was a worldwide grounding of the entire 737 MAX fleet that lasted almost 2 years, cost Boeing tens of billions of dollars in compensation, and, most importantly, destroyed decades of built reputation. While Boeing dealt with the biggest crisis in its history, Airbus simply continued selling A320neos. During the grounding period, the European company expanded its backlog and secured about 60% of the global narrow-body market. The 737 MAX crisis wasn't Boeing's only problem in the 2010s. The 787 Dreamliner, which should have been the company's savior, faced its own monumental problems. Initially, the Dreamliner seemed like a success. It indeed was more efficient, offered a better passenger experience, and represented an impressive technological leap. But production problems, including batteries that caught fire and delivery delays, tarnished the program's launch. Even worse was the 777X, Boeing's newest bet to reconquer the large aircraft market. Promised to enter service in 2020, the 777X still hasn't obtained certification from aviation authorities in 2025. Technical delays, regulatory problems, and the company's general instability created a vicious cycle where customers lost confidence and canceled orders. Meanwhile, Airbus consolidated its position in the widebody market with the A350, an aircraft that managed to balance efficiency, reliability, and innovation in a way that Boeing seemed to have forgotten how to do. Today, the numbers are devastating for anyone who remembers Boeing's absolute dominance. Airbus today controls approximately 2/3 of the narrow-body market and has been consistently growing in the wide-body segment. In wide-bodies, Boeing still leads with 56% of the global fleet, but this advantage diminishes each year. And the horizon doesn't look promising for the American giant. New competitors are emerging. China's Comac with the C-19 has already begun competing in regional markets, and Brazil's Embraer remains strong in regional segments, preparing for possible incursions into narrow-bodies. Behind all this market transformation is a cultural change that might be the real lesson of this story. The merger with McDonnell Douglas didn't just bring new aircraft to Boeing's portfolio, it brought a completely different mentality. For decades after the merger, Boeing prioritized shareholder dividends and stock buybacks over research and development investments. Between 2010 and 2019, the company spent more than $60 billion on stock buybacks, money that could have financed the development of completely new aircraft. Meanwhile, the culture that had made Boeing great, that obsession with technical excellence and willingness to take calculated risks, was gradually replaced by a Wall Street mentality focused on quarterly results. The contrast with Airbus couldn't be clearer. The European company, backed by governments that saw strategic value in the aeronautical industry, continued investing heavily in innovation, even when returns weren't immediate. The result was a series of technological and commercial successes that redefined the market. Today, when we see an A320neo taking off from any airport in the world, we're witnessing more than a flight. We're seeing the result of one of the greatest industrial transformations in modern history. The company that was once the ultimate symbol of American aeronautical engineering discovered that in business, as in aviation, altitude is lost much faster than it's gained. And in the competitive world of commercial aviation, once you lose altitude, regaining it may be impossible.